Alright, before we move into any new material here, I want you to take a look at the following problem. You can see here we have the debit total at $34,800 and the credit total at $35,600. Now, we want those totals to match, so there's a problem here. It says the accountant discovered that the balance for advertising expense had been entered in the credit column instead of the debit column. What I want you to do is calculate and figure out what is the account balance for the advertising expense account that should have been entered in the debit column. And now I want you to tell me what the new total of the debit column and the credit column should be. The first step is to calculate the difference between our debit and credit totals. We see that the difference between the two totals is $800. Since the difference is 800, we know that the amount that was incorrectly entered is half of this, 800 divided by 2. $400 is the amount of the advertising expense balance. For the last step, we add 400 to the debit total, and we subtract 400 from the credit total. This gives us a new total for both accounts of $35,200, and now our accounts match. Alright, what we want to do next is we want to look at step 6 in the accounting cycle. Step 6 is preparing a 6-column worksheet. Now I have here on the screen a review of all of the steps. Notice the first 5 steps that we've discovered or discussed so far are all repeated over and over throughout the accounting or fiscal period. Whereas step 6, which we will discuss today, and also 7, 8, and 9, only occur at the end of the period. So as a quick review, step 1, we collect and verify our source documents. Step 2, we analyze each transaction, and this is where we use our T-account tool to determine the debit and credits. Step 3, we journalize each of these transactions. Step 4, after they've been journalized, we post these journal entries to the ledger. Step 5, we create a trial balance, and the trial balance helps us to know that yes, things are in balance. And now finally, we get to step 6, which is preparing the 6-column worksheet, and we'll look at that now. So, what is a worksheet? Well, just like the T account that we used in analyzing transactions, it's a tool. And what's the purpose of the tool? This tool is a working paper that we use to collect and gather information from the ledger accounts all in one place. This worksheet can be prepared in pencil on standard multi-column accounting paper, or we can use a computer spreadsheet. Now, all the information that's gathered together on this worksheet is what we need to prepare the financial statements, which we'll get to in the next chapter as step 7. So let's look at the parts of the worksheet. There's 5 parts to the 6-column worksheet. And remember, 6 columns means that there are 6 money columns. So you'll see there we have two columns, debit and credit for trial balance, 2 columns, debit and credit for income statement, and 2 debit and credit columns for balance sheet. So we're going to look at each of these sections one at a time. The first column, or the first section, is the heading. And you see this addresses 3 questions: who, what, and when. So who, first thing we're going to put the name of the business. What, the name of the accounting form. This is a worksheet. 3, when, the period that's covered. This is the fiscal period that we're covering, or the accounting period that we're covering. So in this instance, it says for the month ended October 31st, 2000, whatever. All right, so who, what, and when. And notice how this is centered at the top of the worksheet. Section 2 is the account number and name, just like we wrote this when we created our trial balances. So we create the account number and the account name, and this is in order of account number, just as they are written in the general ledger. Step 3 is the trial balance. And again, this is just like we did the trial balance before, and we'll talk more about that later. Step 4 is the income statement. Part 4, Section 4. This is where we will record all expenses and revenue balances. And again, we'll talk more about this when we get to actually filling it out. Section 5 is the balance sheet, where we record all assets, liabilities, and owner's equity balances. So let's look first at the trial balance. This is just like we did it before. And the key here is, remember, include all accounts from the ledger, even if they have a zero balance. We include every account, and it's important to put them in order by account number. So when we look down at the account numbers, 101, 105, 110, 115, they need to all be in order, just as they are in the ledger. And again, we add the debit and credit balances on the proper sides. After the trial balances are recorded, you're going to draw a single line under the last balance. This is referred to as ruling the trial balance section. Ruling, or drawing a single line under the column of amounts, means that the amounts are ready to be totaled. Now, the next step after we draw this single line is we actually total the debit and credit columns. If the totals do not match, do not go any further. You must find the error or errors and correct them before you move any further. Now, once you get matching debit and credit balances, we're ready to move forward. The next step, we draw a double line under the balance totals. This double line indicates that the number above it is a total and that no other entries will be made. Once we've completed the trial balance, free from errors, we move on to the balance sheet section. Now we're going to skip over the income statement section. We'll come back to that. For now, we look at the balance sheet section. This is where we write the balances for the following types of accounts. We're going to include assets, liabilities, and owner's equity accounts. The process of copying a trial balance to the balance sheet is called extending the balance. So we are going to extend the balances of all the assets, liabilities, and owner's equity accounts to the balance sheet. In this case, the balance amounts are extended to the balance sheet section. So we're going to take the debit balance for cash in bank, and we will extend it to the debit column for the balance sheet. And we'll do the same for accounts receivable, for City News, and for the Green Company. We'll do the same for computer equipment, the rest of the assets, liabilities, and owner's equity accounts. The income statement section is where we write the balances for expense and revenue accounts. So just as we did for the balance sheet, we will extend the proper trial balance amounts to the income statement section. So all the expense and revenue accounts will be extended to the income statement. So here we have delivery revenue being extended to the credit column of income statement. Advertising expense is extended from the debit column in our trial balance to the debit column in income statement. And it continues on through the rest of the revenue and expense accounts. Now, just as we ruled our trial balance, we are going to rule our income statement and balance sheet. by drawing a single line, and then we will total each of the columns of balances. Unlike the trial balance totals, though, at this point you should not expect these totals to match. That's okay. This brings us to one of the gap principles called the matching principle. And what this principle states or requires is that matching expenses incurred in an accounting period, or it requires us to match the expenses incurred in an accounting period with the revenue earned in the same period. So if we have a certain amount of expenses, we also need to have that much revenue. The way we fix this and match this results in net income or net loss. So right now, if you look at our income statement and our balance sheet, they don't match. We're going to fix that by either adding net income or net loss. Let's look at net income first. If our revenue is greater than our expense, which is what we want to have, then the net income is the amount of revenue that remains after expenses for the period have been subtracted. In this case, you can look and see that the difference is $115,000. So the difference is added as a debit to the income statement and a credit to the balance sheet. The addition of net income satisfies the GAAP matching principle and causes the debit and credit balances to be equal. It also clearly shows the net income for the business. Now, if the expenses are greater than the revenue, this is recorded as a net loss. The net loss is the amount of expense that remain after revenue for the period has been subtracted. So opposite from the net income, if the difference for a net loss is added as a credit to the income statement and a debit to the balance sheet. The addition of net loss satisfies the matching principle again, causing the debit-credit balances to be equal, and it clearly shows the net loss for a business. Alright, now let's take a look as an overview of what we're looking at for this chapter regarding homework and our schedule. Due on Wednesday, January 6th, I want you to write down in your notebook the chapter 8 vocabulary in your notebook. That's going to be worth 5 points, and I'm going to expect to see that on Wednesday. Looking further, the working papers 8.1, 2, and 3 for 20 points and 8.6 for 20 points will be due on Friday, January 8th. Working papers 8.8 worth 20 points will be due January 12th. Okay, so that's the schedule for vocabulary and working papers that are going to be due. Our schedule today, Monday, we looked at step 6, preparing a 6-column worksheet. Wednesday, January 6th, we are going to have a short quiz, mostly focused on the vocabulary that you're writing down and studying and that we've talked about today. The rest of the period will be a work period to work on the working papers that are due the following Friday. On Friday, we will have another short quiz covering the materials that we've discussed up to this point, and again, a work period to work on working papers 8.8 and ask any questions you have. Tuesday, January 12th, we will have a Chapter 8 test, and then we will move on to Chapter 9.